Hello traders and welcome to my video on the trend strength indicator. In this video I'm going to show you how you can use this indicator to help you catch moves like this for almost 600 pips. Okay, this is the MT4 trading platform, a US dollar, Canadian dollar 4-hour chart. You can see here with the trend strength indicator in its own window below the chart. I downloaded the indicator free online. You can probably find it if you don't already have it in your platform. I'm going to make this strategy as simple as possible. As I said, this is a 4-hour chart. I prefer the higher chart time frame, so that's the 1 hour, 4-hour, daily, weekly, monthly, simply because they contain more price data and therefore I find the signals tend to be more reliable, and that applies to technical indicators such as the trend strength indicator, but also price action analysis, candlestick patterns, support resistance, trend lines, that sort of thing. Okay, I don't see why you'd want to stress yourself out trying to trade the 1 minute, 5 minute charts all day long when you can capture big moves like this for hundreds of pips on higher chart timeframes with less time chart watching. You can use this strategy on any trading instrument. Okay, so that's Forex, stocks, commodities, cryptos, indices, bonds, etc. Right. So the first thing to do is with the trend strength indicator, as the name suggests, we're going to use it for trend trading. So we just want to determine the direction of the trend. So we can draw our support level here and we can see that we're in a clear upwards trend. Okay. And so how I would usually trade this to be honest with you, is without any indicators at all. So if I just move that indicator out of the way for a minute, what I would do is I would simply just draw the support and resistance like I've just done with the support there. And I draw my resistance probably here somewhere. Okay. And then look to enter on a breakout to the upside. And that's exactly what we get here. You see a nice breakout here. Okay, whether we take this breakout or some traders may argue this breakout, either way, it's a good time to enter into this trend. If I just remove this line here, we can see that the market's making these lower highs, sorry, higher lows. So we know the market's moving upwards. It's a strong level of support, this trend line here. Okay, so the bears who are in this particular move here, they're either taking profit around this level or some are perhaps trying to sell here, getting caught in a bear trap. They're selling at the low. Their stop losses are getting taken out and it's just causing this momentum here to the upside. Okay, so it gives us an opportunity to enter on the new trend on the breakout. And had we have taken these early entries, as I said, 4-hour charts, so plenty of price data within them, therefore these levels we know are reliable or most likely reliable compared to, say, support resistance on a 1 minute chart. And 500 pips in just over a month from simple breakout trade in line with the trend there. Okay. Had we have taken that trade, stop loss just below the low here. So on that breakout, you're looking at probably around 30 to 40 pips for your stop loss, which is not bad when you consider 500 odd pips on, was it 500? Yeah, around 500 pips available. Okay, granted, not everyone would have still been in here, but certainly what I wouldn't have done is I wouldn't have exited. Say we had a 30 pip stop loss and the trade moved, I don't know, 90 pips, 3-to-1 risk to reward ratio. It'd be easy to panic and get excited and exit the trade there with a 3-to-1 risk to reward ratio, which isn't bad at all. But then you've left all this on the table unless you're planning on re-entering. So in that instance, what I would do is first things first, I'd move the stop loss to break even as soon as possible, and then I just place it below the lows on the way up of the move. Okay, that way we can just maximize the move as much as possible. And then once price starts to consolidate or turn around, we can either exit manually or our trailing stop will take us out, and then we can wait for the next opportunity. Okay. If you do get taken out prematurely for whatever reason, you can just wait for another pullback like this one here. See, price pullback and a continuation on the breakout. You can just enter on a pullback and a breakout throughout trends, especially on the higher chart timeframes where these levels of resistance or support for a downtrend tend to be more reliable. You can see from these big breakout candles there. There's one, okay. Big breakout candle there, okay. Big breakout candle there. Traders are watching these levels and looking to trade on the breakouts in line with the overall trend, okay. Pullback there, okay. resistance, resistance, breakout, resistance becomes support, continuation, ample opportunity to enter throughout this uptrend. And then, as I said, when price starts to consolidate, you might want to just wait for another move to start forming before we take any trades. Okay, so, naked chart trading, as it's called, with good money management, we can capture plenty of pips on trends. So now if we bring the trend strength indicator into play, how does that coincide? Well, the way that I'd trade with this indicator is I'd use it for identifying higher lows for an uptrend. So you can see there, higher lows, we're in an uptrend, and lower highs for a downtrend. So it's making lower highs there, okay, and we're in a downtrend. Okay, so that's the first thing to look for, your divergence on the indicator. And then also I'd look for, once we've determined the trend direction, generally the higher the indicator is, the greater the uptrend has gone on, and you don't want to end up buying too high. So, if you see the indicators up here, you might want to not buy this particular high point. You might just want to wait for a pullback first. Same in a downtrend, you don't want to sell when the indicator is too low, because you can end up selling at the bottom. That's another thing you can look for on the indicator. Also, you can look for pullbacks into the trend. So once you know that, okay, we're trending up, higher lows, we can wait for a dip. So the indicator dips in the opposite direction, and then a continuation, and then we can just use that to trade on the pullback, okay, and the continuation. So you'd be looking around here somewhere, which coincides nicely with our breakout trades. Here you can either mark your resistance on the indicator like that and just wait for the breakout above there, okay, which you can see would have been an ideal entry in this particular trend. And if I just show you an example of doing that, you wouldn't buy up here just not only because it's at the high, but also if we use it for resistance, okay, you can see price doesn't actually break back above there. Okay, so that could have been one way to stay out of danger. So indicators aren't always about trying to tell you when to enter a trade. They can tell you also when not to enter a trade, okay? And perhaps maybe that might have helped thinking about an exit, or at least closing part of the position, or moving the trailing stop if there's price starting to turn around. For that in the uptrend, and if we look at the downtrend example again, so you can see the indicator making these lower highs, means we're in a downtrend. Okay, can wait for the pullback. So around here somewhere, when it's making these higher lows, is when we get the pullback, and you just need to apply that on your chart. You can see area of consolidation, nice support level, and a big breakout there to the downside is a good entry into this particular downtrend. If you wanted further confirmation, you could of course just done your resistance, marked your lower highs, nice wedge formation there as well. Lower highs there, price consolidation here in this channel, and a good breakout there. You also have your bearish candlestick patterns. I do have videos on all the various bearish and bullish candlestick patterns. It's good to be aware of, but with sensible money management, stop loss above this high here on this particular trade, 30 odd pips, let's say, and a profit potential of 260 odd pips, so not bad at all. Okay, and the indicator again can help you out of trouble if for whatever crazy reason price is here and you think it's a good idea to sell. You're going to get caught in a bear trap, I can tell you that, without any indicators or lines at all. However, if you insist on using the trend strength indicator, you could just draw your support line there, and you can see price doesn't break below, so you want to perhaps stay out of trouble there. Not to mention it's making higher lows as well, so we're seeing a turnaround. Okay, going back to using it for breakout as well. If you want to just use the indicator to help you mark the breakouts. So on the we know we're in a downtrend, so we're looking to sell. We wait for a pullback, and then the breakout below with the indicator is there. Okay. So the crossover there, which is not a bad entry point. I mean, had we have just taken this support, we would have been in slightly earlier, but still would have been a decent breakout trade. And again, similar scenario here. Okay, you get the pullback and then a breakout trade Just emphasizing how indicators, say a breakout trade there, but this just emphasizes how indicators can be lagging. And the reason I say that is because we could have manually got in earlier on this breakout, that support level here, by just not being lazy and drawing lines ourselves. So for the trend strength indicator, we've covered divergence. Okay, we've covered momentum, like if it's exhausted, either too high or too low, you don't want to buy at the high or sell at the low. So we've covered that. We've also covered a break, how to use it for pullbacks and breakouts. And to be honest, I think that is the main aspects I would use. As I said, I personally prefer just to draw the trend lines and support and resistance myself, and maybe keep an eye out for candlestick patterns. But when we're trading on higher chart timeframes, things just it seems to be easier to trade with price action because there's so much data included within the candles. Whereas too many traders, I feel, are trying to chase the perfect indicator and trading. Not only that, they're trading 1 minute or 5 minute charts, hoping to just get hundreds of pips. Is, in my opinion, not going to happen. And I think just end up paying lots in brokers, fees, commissions, spreads. You get slipped out of trades. Not to mention you stress yourself out when you can just capture big moves like these for hundreds of pips. You know, on the longer term chart timeframes, people think that they have to wait forever. I mean, this is just the space of I don't know, 3 to 4 months. Around 400 pips potential there. 500 plus pips potential there. Not to mention, with the amount of trading instruments you can choose from as well, you're always going to find opportunities. You can go down to the 1 hour chart if you want more. You can go up to the daily chart to look for signals. But yeah, you'll need good discipline, of course. Get your emotions in check. You don't want fear, greed, anger, revenge trading, FOMO, fear of missing out. You don't want to overtrade. Okay, just good money management as well. Just emphasize the importance of money management. If this trend strength indicator, we're using the divergence, we're trading the breakouts, if the price isn't exhausted, it's helping us in that way. But you're only taking 50 pips profit every time you're going to chase your tail because you're just leaving too much on the table. I mean, there's hundreds of pips available, which is why I don't use rigid take profit levels. I just let the trade play out and capture as much as I can. That way, if we do have a 20 pip stop loss and lose, say, 3 trades for 60 pips, even if we lose 4 trades and we're down 80 pips, we capture a big one, we can make back that 80 pips and a lot more on top. Whereas if you've got 20 pip stop loss and a 40 pip take profit, it's just going to make your life a lot harder, in my humble opinion. Okay, well, hopefully you've discovered various ways in which you can use a trend strength indicator in your trading strategy. As I said, it's not a necessity. I think it's something that you can do, just marking the lines yourself on the chart. Do appreciate you watching. If you could like and subscribe, that would be great and help my channel. And I hope to catch you on the next one. Take care.